but perhaps the whole Santa Claus rally hinges entirely on what happens next week when Jay Powell and the Federal Reserve hold their final interest rate policy meeting of the year. While a quarter-point cut to the benchmark interest rate is widely expected, that, our floor show guest says, is only the beginning of what the markets need to see to shove the bull market rally into 2026. He's Stephen Dover, Chief Market Strategist at Franklin Templeton, which manages $1.6 trillion in client assets. Stephen, while there appears to be around an 87% chance of an interest rate cut next week, much expected, for the moment, January and March look like no cut yet, under 50% odds. You have to wait till April before the odds go above 50% for another easing. Does that count as a rate-cutting cycle, not just a one-off?
Yes, absolutely. It's a rate-cutting cycle. Maybe not as aggressive as some want, but I think in talking to your previous people that you've talked to, many think that even having a rate cut next week is too soon. So we're seeing 3 rate cuts through the end of next year. That's very positive. Actually, extremely positive. We did a study of the last 50 years when the Fed cut rates in an expansionary environment. That's happened 8 times. 100% of the time after that, the market's up. A year later, on average, 17%. Riskier markets are up even more. That said, there's lots of volatility over that year, often a 10% pullback.
Yeah, well, since the first rate cut that we've had this year, the markets are higher. But when you look at previous rate-cutting cycles, it is pretty impressive to see what they do. I mean, your white paper showed that the S&P shows an average return of 17% in similar rate-cutting cycle environments a year after the cycle began. NASDAQ's the big winner here, usually on average returning 25%. So I'm just getting this clear. You consider 3 rate cuts between now and next year still a rate-cutting cycle?
Absolutely. We're very positive on next year, but we're cautious that we think there's going to be pullbacks over the course of that period of time. You have to watch out for those. Those are usually going to be buying opportunities. There's a lot of cash sitting on the side, so there's money there to buy when there is any pullback. We're actually think that the pullback that we've seen over the last month, 6 weeks or so was healthy, could have even been a little stronger. Builds the case that over this next year, things are going to be very strong. We see a strong 2026. You've talked to me for a long time. You know, I'm basically a value manager. That's not the way I normally talk, but that is our outlook for 2026.
Listen, value managers have different shades of stripes. We know that. I mean, you are a different animal, certainly like a Buffett type of person, but there are many different types. And so that makes me want to ask you, does tech in some way, shape, or form fit into your value scenario for next year?
It fits into the scenario in the sense that we're still think that there's great opportunities in tech. It's one of the sectors that we like. But I think that investors probably need to look at risk at a different level than they have in the past, both upside risk and downside risk. You've got to be in the market. We think the market has a lot of opportunities, but you've got to be careful about not being overweight in those tech stocks. So that's our theme of broadening in the market. We see opportunities in small cap stocks. We see opportunities, and really this is a stock picking opportunity, at looking at where artificial intelligence is going to increase productivity in the economy. This is the game. All that capital spending, how is it going to pay off in the economy in terms of productivity? So we're looking at industrials where it'll hopefully pay off. We're also looking overseas, again, in this theme of broadening opportunities and reducing risk, and that includes emerging markets particularly.
Emerging markets. Well, that's sort of a side stand out there from everything else lately, but we're waiting to see that rear its head more. Stephen, it's good to see you. Thank you so much to you and the team at Franklin Templeton. Happy holidays.